Candlesticks. We're going to talk about candlesticks, what candles are. And tomorrow we're going to go deeper into how to read candles and like how you can spot reversals, how you can spot market structure, the creation of market structure through candles. But today we're going to focus on what candles are, and we're going to focus on different types of orders in the market. Why is that? Why am I going back to the basic stuff? It's because I'm getting a lot of questions on that. So I focus on this whole boot camp has been a focus on answering the most common questions that I get, so that people starts to understand trading and understand the most basic aspects of trading. So it's easy to start talking about the complicated stuff and dive into the nitty-gritty. But this is the bread. This is the foundation in trading. This is what you gotta know. So with that said, we're jumping into it straight. What is candles? What are candles in trading? Candlesticks, that's what it's called. Let's go into the XRP chart because it's more clean, and let's look at it. All right, cool. So what is a candle? What you see in here, this is a candle. All right, snap, what's going on with that? So this here, candle. All right, now on this candle, what you have is wait, let me check this. You have a candle wick. Let's do this nicer. So wick, body, but then also you have opening and closing. I'm gonna type it all down so you see it nice and clear. Opening and closing. All right, let's type it down. Wick. This is the candle wick. This is the body, the candle body. This here is closing. And this here is opening. Now we're going to talk about, opposite. Opening, closing. So we're going to talk about a bullish candle first, a green candle. So green candle most often represent bullish candles, but it doesn't have to be green. A lot of people keep them white, black, blue. You can change colors in your settings. So, but that is not important in this case. The important thing is for you to understand what it is you see. So first off, this is a candle. All of this represents a candle, but you have the wick coming out here, right? And what it is this. So this candle opened where this one closed. Now this is a bearish candle, so we're gonna talk about it very soon. First, we talk about the bullish candle. So this candle closed down here. Where this candle closed, this candle opened. It opened down here and closed up here. So therefore the candle body, the body represents the opening till closing. All right. Now, what does the wicks represent? The wicks represent the candle's moving range during that open time. So this is the time the candle been open. It opened here, it closed up here. But while it was open, let's say it opened here, maybe it moved down first. The first thing that happened was it continued to move down, and then it came back up here to retrace a little bit. It has a little wick here. Retrace a little bit and close here. When this one closed, the next one opened and closed down here. So I hope you're with me here. Candle open here, candles open here, goes down, creates this wick, but then moves up again and closes up here. Therefore, this is the body and this is the wick. This is the moving. The wick represents the moving range outside the opening and closing range that's been during this candle's lifetime. And we're going to talk about lifetime very soon. First, we're going to look at a bearish candle. So this was a green bullish candle. Now let's look at a bearish candle. Bearish candle, same thing, but the opposite. Let's look at one that has 2 weeks. 2 weeks. This one has 2 weeks. So, oh no, just to simplify it, let's continue. So, as I said, this one opens here, moves down, comes back up, closes. Now where this one closes, where the green one here closes, when this one closes, the next candle opens where the last one closed. All right. So you see this one closed, opened exactly where this one closed. All right. Opened. Let's do like this. Opened here. And closed here. All right. So the green candle, the bullish candle, opened down here and closed up here. That means for it to be a bullish candle, it has to close at a higher price level, at a higher price target than it opened. All right. So it closed more expensive basically than it opened. Price went up. Now for it to be a bearish candle, it's the opposite. It opens here where the last bullish candle closed, and it closes underneath. So it closes underneath the opening price. It means it has gone down in price. So this one goes down in price and closes on a lower price level than it opened. All right, bullish candle, open and close above the price that it opened at. Bearish candle, open and close below the price that it opened at. And the wicks, as I mentioned, represents the movement of the candle. So let's look at this one, for example. So this one has 2 wicks. All right, we have this wick and we have this wick. And what the candle did is this one opened and closed below, right? Next one, this candle opened and closed at the lower price. Therefore, a red candle. But when it opened, it moved maybe up first, then it came down and retraced back and closed here. And therefore, you see wicks representing the whole body movement, the whole candle movement during its lifetime. Now, if you got that, or if you didn't get that, type it in the chat box. I repeat it. So now, you know the opening and the closing during a candle's lifetime. Now, what is a candle's lifetime? And we're looking at time frames. So what we're looking at here now is a 1 hourly time frame. It's the 1 hourly time frame. That's why you see the 1H is the 1 hour. I can put the 4 hourly time frame. Then every candle will represent 4 hours. So basically, let's say this one opens here now. It will close 4 hours later. So what you see on the candle, in the candle body, with the whole candle is the movement during these 4 hours it was open. All right, and where it closes after those 4 hours, if it's a bullish candle, then you see that's the top of the body. If it's a bearish candle, it's the bottom of the body, where for the open and close range. So opens here, close here. All right. So if it's a 4-hourly time frame, the candle body represents 4 hours. If it's a, sorry, not the candle body, but the whole candle. If it's an hourly time frame, the candle represents 1 hour. This is what happened during its hourly time frame. If it's 50 minutes, then the candle represents 50 minutes. Every 50 minutes, it will form a new candle and a new candle and a new candle. So I hope you got that, people. And if you didn't get it, type it in the chat box. Tomorrow, we are going to talk about reading candles. We're going to talk about reading candle patterns, and different types of candles, and what you can make out of them. So, for example, shooting star, you know, hammer. There are different names to them. Doji, spinning top. And they represent different things in the market, and some of them are very good for spotting reversals in the market. So it's good to understand, like, at least the basics of them. So we're going to go through that tomorrow. But now let's jump from candles to orders. Why am I going from candles to orders? It's because I get a lot of questions on that. So I wanna make that clear once and for all, so we ain't getting no mistakes on the trades. Now, what types of orders are there? So there are market execution orders, and that is basically you're buying and selling with a market execution. So it means you're buying and selling right now. And your broker will fill your order as fast as possible with the closest order there is available for whatever, if it is a buy, if it is a sell. But that is an execution that is happening right now, market execution. Then you have stop and limit orders. So we have stop orders, and you have limit orders. Market execution is now. All right. Now, what is stop and limit orders? Stop and limit orders, once you get it, you get it. I remember way back when I couldn't understand limit orders. It was difficult for me. And once I got it, I got it. It's actually quite simple. So let's say you place a sell limit here. Sorry, a buy limit, I mean, here, down here. All right. Let's say we put in a buy limit here. So it means when price comes down to, let's put a nice round number. All right. So when price comes down to 0.38700, we want to enter the market. Now, if this was a sell limit, if this was a sell stop, when the market would pass this zone, we would enter a sell. This is a buy limit, so it means that when market has to pass this zone first, our buy limit zone, our buy limit level has to pass it downwards first and then come back up. So a limit order, it basically catches it triggers the order on it when the market moves up again and passes that area. All right. So let's say this market retraces, it passes our entry zone, no worries, because it won't trigger it. Let's say it's coming all the way down here. Nothing will happen with our limit order. Nothing will happen until it moves in this direction and passes. So it moves in the buy direction, in the correct direction. When we're in a buy limit, when it moves in the buy direction, so when it moves upwards and passes our buy limit level, then our order is triggered and we are coming into the market. This is an automatic order that you can put on your MetaTrader, or if you have a Vantage broker that uses their own platform, or any other platform that you use. You can always put buy limit, sell, buy stops, sell stops. So very important to understand this, because I'm going to talk about a buy stop order next. So it's important that you understand what a buy limit is. So buy limit is we want to go into a buy down here at this level at 0.38700. All right, that's where we want to enter a buy, but we don't want the buy to be triggered on the market's way down. We want the buy to be triggered on the market's way up. All right, so on the market's way up, when the market moves in the right direction, when it passes our limit, our point of entry, then the limit order triggers, and we are in the market. Now, let's look at buy stop. Buy stop, still looking for buy, of course, and we're still looking for buy order, but this is now when market passes through. All right, so for example, you cannot do a buy stop order here. Like most brokers, it won't even work. Like you will just get this sound that it didn't work. So you cannot put a buy stop here. Here you can only put a buy limit, because market has to come down and then come back up and trigger the order. For it to be a buy stop, market has to be underneath the entry level, and when it passes through, boop, triggers the order. That's a buy stop. Now, sell limit, same thing, but reverse. Let's talk about it. So let's say I have a sell limit order here. This is a sell limit. And we don't want the order to be triggered when market goes in the wrong direction, right? So we are waiting for the reversal, and when market moves in the right direction. So market moves, boom, 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 it does its thing, and then it starts to move in the right direction. When it passes our sell entry level, the order triggers, and we are in the market. Hope everybody got that. What is a sell stop? Sell stop, same like buy stop, but same thing again, the opposite. So, sell stop, market, the stop order first and foremost has to be underneath where the market price right now. So when the market moves and passes the sell entry level that you have placed in your sell stop order, the stop order will be triggered and you will be in the market. You are entering the market. So sell stop, market is above the entry price, the order price, and when market passes through in the right direction, it will trigger the order. Sell limit, market is below. Market is below the order entry level, And when market passes through in the wrong direction, nothing will happen. But when it comes back down and moves in the right direction, it will trigger the order and you are in a sell. So that is buy stop, buy stops, buy limits, sell stop and sell limits. I hope everybody got that. Hope you understand. If anything, let me know in the chat. And with that said, what do? We look at the markets. Let's jump into it. Let's see what's going on here. So